Hello everyone, this is Rhea Mae G Mahilom from BS Management Accountancy Department, and today we are going to talk about accounting stuff. We are going to talk about IFRS 8 operating segment. Large entities produce a wide range of products and services, like for example, multinational companies, and often in several different countries. Further information on how the overall results of entities are made up from each other of these product or geographical areas will help the users of the financial statements. And the reason of reporting segment or segment reporting is this: the entity's past performance will be better understood, the entity's risk and returns may be better assessed, and more informed judgment may be made about the entity as a whole. Now, risk and returns of a diversified multinational company can be better assessed by looking at the individual risk and rewards attached to groups of products or services or in different geographical areas. These are subjects to differing rates or profitability, opportunities for growth, future prospects, and even risk. An entity must disclose information to enable users of its financial statements to evaluate the nature and financial effects of the business activities in which it engages and the economic environment in which it operates. Now, the question is who will have this report in operating segment? These are the entities whose equity or debt securities are publicly traded. Example, on stock exchange for the Philippines, that's Philippine Stocks Exchange. They need to disclose segment information. And in group accounts, only consolidated segmental information needs to be shown. And also the statement that applies to entities filing or in the process of filing financial statements for the purpose of issuing instruments. So that is the objective and scope of operating segment. Operating segment is a component of an entity that engages in business activities from which it may earn revenues and incur expenses. Now, this includes revenues and expenses relating to transactions with other components of the same entity, and also whose operating results are regularly viewed by the entity's chief operating decision maker to make decisions about resources to be allocated to the segment and assess its performance. Later, we are going to review and discuss what is the role of a chief operating decision maker, and lastly, for which discrete financial information is available. So that is the definition of operating segment. Who is this chief operating decision maker? The term chief operating decision maker identifies a function, not necessarily a manager with a specific title. The function of chief operating decision maker is to allocate resources and to assess the performance of the entity's operating segment. We also have a term here, aggregation. Now, two or more operating segments may be aggregated if the segments have similar economic characteristics and the segments are similar in all of the following respects. So here are the list. First is the nature of the products or services, the nature of the production process, the type or class of customer for their products or services, the methods used to distribute their products or provide their services, and lastly, if applicable, the nature of the regulatory environment, whether it is a publicly traded company or not. Let us talk about reportable segments. How will that segment become reportable? Now let's start with the 10% threshold. An operating segment is reportable segment if any of the following size criteria are met. So we are going to have the revenue test, profit or loss test, and the asset test. For revenue, that should be equal to or more than 10% of the total revenue. That includes internal and external. Or in segment profit or loss, it must be equal or greater than 10% of the profit of all segment in profit, or loss of all segments making a loss if greater. In this area, you have to separate the profit or the loss, and whichever is greater, that is your basis if that reached to 10% or more. And last is the segment asset. It should be equal to or more than 10% of the total assets. Next is the 75 criteria. At least 75% of total revenue must be reported. That's external revenue by operating a segment. Where this is not the case, additional segment must be identified even if they do not meet the threshold of 10%. This is where aggregation comes in. Remember what I said earlier, that there are 2 or more operating segments below the threshold may be aggregated to produce a reportable segment. If the segment have similar economic characteristics and the segments are similar in a majority of the aggregation criteria. Like for this example, in segment 1, 2, and 3, the revenue is 2,400,000, 1,600,000, 1,200,000, and the total of 5,200,000. And when you get the percentage of the reportable segment, it's only 30%, 20%, and 15%. And it is equal to 65%. Remember, our criteria of 75% should be applied. So these segment who has same with their major criteria in aggregation, that is segment 7 and 8, so that's 6% plus 5%, that's 11%. And when you add those segment in 1, 2, 3 with the combined 7 and 8, that will be 76%, and that will be part of the reportable segments. What about those operating segments that do not meet any of the quantitative thresholds? Should they be reported or not? Well, if the management believes that information about segment would be useful to users of the financial statement, then yes, it will be part of the reportable segment. And also, we have to remember that even though there is no limitation as to the number of the reportable segment, the practical limit for the reportable segment is 10. We have to remember that. Let's move on to the disclosures. What are the segment disclosures? So actually there are 3. First is the identification factor. So this factor is used to identify the entity's reportable segments. And the second one is the products and services. Types of products and services from which each reportable segment derives its revenue. And for each reportable segment, this includes revenue both in external and inter-segment separately, the interest revenue, interest expense, and so on and so forth. So you may read and refer the list beside. And also, we have to remember that a reconciliation of each of the items beside to the entity's reported figures is required. Reporting of a measure of profit or loss and total assets by segment is compulsory. Other items are disclosed if included in the figures reviewed by or regularly provided to the chief operating decision maker. Now let us talk about the entity-wide disclosure. So these are the disclosures that are required for the whole entity. Let's begin with product basis revenue. External revenue by each product and services, if reported basis is not products and services. The second one is geographical information. This is the external revenue based on customer location and non-current assets. So these are the disclosure. Entity's country of domicile, all foreign countries subdivided if material. For non-current asset, this excludes financial assets, deferred tax assets, post-employment benefit assets, and rights under insurance contract. And lastly, the reliance on major customer. Information about reliance on major customers should be disclosed, and this is those who represent more than 10% of external revenue. The entity shall disclose the fact of reliance on major customers, the total amount of revenue from major customers, the identity of the segment or segments reporting the revenue. Now question, is it required to disclose the identity of the major customer? Well, actually no. There is no requirement to disclose the identity of that major customer or the amount of revenue that each segment reports from that customer. Now for the self-test. easiest level. So the problem is, in the income statement for the current year, Mae's company reported revenue 50 million, excluding inter-segment sales of 10 million, expenses 47 million, and net income 3 million. Expenses include payroll cost 15 million. The combined identifiable assets of all reporting segments at year ended totaled 40 million. Questions: what is the minimum amount of sales to a major customer? What is the minimum amount of external revenue to be disclosed by reportable segments? I will give you 20 seconds to answer the two questions. If your answer in question 1 is 5 million, then you got it. A major customer disclosure is required if an entity derives 10% or more of its external revenue from a single customer or a group of entities under common control. For question 2, if your answer is 37,500,000, then you are right. That is 75% times 50 million. The total external revenue attributable to reportable operating segment must be at least of the total entity external revenue, and that's 50 million. Now for self-test easier level, Kirsten Company, an entity listed on a recognized stock exchange, reports operating results from its North American division to the chief operating decision maker. The entity revealed the following segment information for the current year: revenue 3,800,000, profit 1,200,000, assets 1,800,000, number of employees 2,500, and the results for all of the operating segments are in total: revenue 40 million, profit 10 million, assets 20 million, number of employees 25,000. I will give you 15 seconds to answer this question. If your answer is profit threshold, then you are right. That's 1,200,000 divided by 10 million, that's 12%. The revenue of the North American segment of 3,800,000 is less than 10%, and assets of North American segment of 1,800,000 is also less than 10%, and the number of employees is not a criterion in determining reportable segment. For the self-test easy level, FEMA Company disclosed supplemental operating segment information. The following information is available for the current year. So there's segment X, Y, Z with the sales 5 million, 4 million, 3 million respectively. Traceable expenses 3 million, 2,500,000, 1,500,000. For the sales, it's 12 million. Traceable expenses, that's 7 million. And we have here additional expenses are as follows: indirect expenses 1,800,000, general corporate expenses 1,200,000, interest expense is 600,000, income tax expense 400,000. The interest expense and income tax expense are regularly reviewed by the chief operating decision maker as a measure of profit or loss. Appropriate common expenses are allocated to segments based on the ratio of segments sale to total sales. The question is, what is segment Z's profit for the current year? I will give you 15 seconds to answer this. If your answer is 800,000, then you got it right. Sales, segment Z, 3 million. Then the expenses, that's 1,500,000, that's 450,000. Indirect, of course, you have to consider the ratio. And then the 150,000, the 100,000. So segment profit is equal to 800. That's 3 million minus 2,200,000. Remember, the general corporate expenses are not allocated to operating segment as a measure of profit or loss. Colt Company has 4 manufacturing divisions, each of which has been determined to be a reportable segment. Common costs are appropriately allocated on the basis of each division sales in relation to Colt's aggregate sales. Colt's Delta division accounted for 40% of Colt's total sales in the current year. For the current year, Delta division had sales of 8 million and traceable cost of 4,800,000. In addition, the Delta division incurred interest expense of 680,000. In the current year, Colt incurred costs of 800,000 that were not directly traceable to any of the division. It is an entity policy that interest expense is included in the measure of profit or loss that is reviewed by the chief operating decision maker. Question: what amount should be disclosed as Delta's profit for the current year? The answer is found below the question, but for the solution, it's your turn to shine. Thank you everyone for watching this video about PFRS 8 operating segments. Thank you, God bless, Laban Future CPA and CMA.